So this is example number 3 of a bank reconciliation. The bad news is, I'll give you the good news and the bad news. The bad news first. Bad news is this is really complicated. The good news is that this won't be on the test. What this example adds is that you actually have to compute or calculate the deposits in transit and the checks outstanding. I want you to see this so that you will not walk into an office and expect to see that already done for you, because it won't be. You have to figure this out. So this is how it's figured out, but it's way too much to ask on a test. So that's the real good news on it. Okay, so with this problem, I've got what we know already started, just not to take up a whole bunch of our very valuable time. So you were given, here's the bank side of things. You were given the balance per bank. You're given the, oh, wait a minute, we're not given the deposits in transit. Gotta get that out of there. You were given, on the book side, the balance per books. We collected a note receivable, interest revenue, collection fee on the note, and deduct the check order. And so this is the adjusted balance per books at the moment. What we were not given is the deposits in transit and the checks outstanding. And so that's what we have to figure out. So let's look at what we're given in the problem. First of all, if you look at it, you're given the October bank reconciliation. This is the bank reconciliation from last month, and that's what you would have to pull out to do the bank reconciliation for this month. So October is last month for our purposes here. And you can see that as the end of October, a deposit of $842 had not made it to the bank, so that was the deposit in transit last month. And then they had some checks outstanding, all listed with the check number and the amount. And then you got your adjusted cash balance. Okay, so what else are we given in this problem? We're given the bank statement for November. This is from the bank, and that lists all the checks that have cleared the bank. It lists all the deposits that have cleared the bank. So that's the second item. So far we've got last month's bank rec, we've got this month's bank statement. Now the third and fourth bits of information we're given are the company cash payments journal. That's all the checks that we wrote this month that we know about. And then we have the cash receipts journal. That would be the deposits that we have recorded for the month. Okay, so what we're trying to figure out are deposits in transit. So let's look, we'll start by looking at the last month's bank reconciliation. That's the October 31st one. We had that $842 deposit in transit. Our first question is, did that make it to the bank ever? And if we look at the bank statement November 30th, the very first item, $842, it made it. Okay, so that's good. That's not outstanding. And so that takes care of comparing this month's bank statement deposits with last month's bank reconciliation to make sure that anything that we had listed as outstanding actually made it. Now we have to check the bank statement at November 30 with our cash receipts journal, which are all the deposits we made. And if we go down that whole list, we can see our cash receipts journal for November. We start with the $666 and we go down to the $2541. If we compare that with the bank list of the deposits they got, they're all there. The 666, the 545, and right on down until you get to the 2541. And that would make sense because on our books, we entered that in our books right at the end of the month. Chances are it just didn't make the cutoff for the bank statement. So our deposit in transit for the end of November is going to be that one deposit of $2541. Okay, so now checks outstanding. How do we work with that? Well, let's go back and look at the checks outstanding on the last month's bank reconciliation. So we're starting with, you got check number 2451 for 700, you got 396, you see what I'm talking about. Okay, so we're going to see if all of those cleared the bank. And if we look at the bank statement and the checks that cleared, this is sort of, that we will see that check number 2470 cleared, but that 2451 did not clear. So check number 2451 for 700 bucks, that's still outstanding. So, what did I say? Got too many numbers going around in my head. Oh, 24. Yeah, okay, so the check number 2451 for 700 is still outstanding. So we have got checks outstanding of 700. Okay, so we would do a separate schedule of this. I'm just going to put them there so we kind of keep track of what we're doing. Okay, so then we look and we say, okay, so looking back at the bank reconciliation from last month, did check number 2470 clear? Well, yes, it did. There it was 396 cleared, 2471 cleared, 2472, not so much. So 2472 for $270 is still outstanding. Okay, that didn't get to the bank. The other check from last month for 578, that did clear. Okay, so now we've compared, we made sure that, what cleared and didn't clear from last month's bank reconciliation. Now we'll check the cash payments journal for this month. Aren't you glad this isn't on the test? We'll check the cash payments journal for this month against the checks that cleared the bank. And you're really just going to go one by one, and at the end of it you'll find out which ones cleared and which ones did not clear for the month. And so let's so you would just go basically one at a time. So your checks outstanding so far are the 700, the 270. There's a whole other list that I'm going to just leave you to look at the notes for, but there's check number 2478 for 300, 2482 for 350, and a few more, so that by the time we're done, we end up with our total checks outstanding. I'm just going to put the total up here of $34.50. Okay, so now when we go plus this, minus that, okay, we get $81.91. And at this point we go, after all that, it doesn't balance. Oh no. And so then you have to go and find the errors. It's like not bad enough that we've got to find the deposits in transit and the checks outstanding. Now we actually have to go find the errors. They're not even going to tell us what they are. So what we have to do is we first start by comparing the deposits. And you make sure that the ones that are on the bank statement are the same amounts as the ones that were entered in the in the company books. So if we look at the deposit made on November 21st, the correct amount is on the bank for $16.24. The incorrect on the books was $16.42. So we need an adjustment there of $18. So the adjustment down, it's going to be an adjustment down because the correct amount of the deposit was about $16.20. We put $16.40 approximately on the books, so we told our books we got more money than we actually do. So we're going to have to make an adjustment down for $18, the difference, and that would be for a deposit, the deposit error. Okay. Then we got to look again because it's still not adding up, and so we have to check the checks and see if there's an error there. And so if we look at check number 2479, and you do this just by kind of going through the checks and eyeballing them all, the correct amount on the bank statement is $980, but what we entered on the books was $890. So we're going to need a $90 $5 adjustment. Okay, and so now we have to figure out, is that going to be an adjustment up or an adjustment down? And this actually ends up being an adjustment down as well, so the check error. Sometimes the errors will be upward adjustments, and so this would be for 90. So now when we add and subtract and do all of that, we will actually reconcile, all right? Okay, so that reconciles, and then we would do the journal entries, which I will leave you to look at on the notes. And so this is more what, you know, the actual process of going through a bank reconciliation. This is kind of the real deal on it. Okay, and that's it.